All right, real estate agents and possible consumers or buyers out there. My name's Rob Ross. I'm with the Ross Group at Intercoastal Mortgage, and on behalf of myself and the Ross Group, we wanted to give you a little insight on how we track interest rates for our buyers on a daily basis. We have several different things that we subscribe to. This is one of my favorites, known as the UMBS Highway, and it really helps us track rates daily and give the best advice for clients on when to lock in or potentially hold. We don't give a lot of holding advice right now because there's a lot of uncertainty out there. And, we need to be careful for our clients and make sure we're giving the best advice. Plus, at Intercoastal Mortgage, if rates get better, we could always float you down to a lower rate. So we kind of have you covered on both sides. But to give you, the real estate agent, a little insight, right here you have the uniform mortgage-backed securities. And right here you have the 10-year United States U.S. Treasury. And those are two of the things that we do most of the tracking through in the industry. You will notice a chart here. It works the opposite with the uniform mortgage-backed securities. And you'll notice a rate here of around 5.5%. Whatever this rate is right here, actual mortgage rates are anywhere between 1% to 1.5% higher than that on a daily basis. That's the tracking of the mortgage interest rate, okay? And that's, this is your yield, right? And basically with this, with rates being a little bit higher, you're going to ask, why are interest rates higher than that on a 30-year fixed? Well, there's a lot of reasons. Because a mortgage company has to originate it. A mortgage company and loan originator have to get paid on it. Then you have to sell it to a servicing company, or you're going to service it yourself. There's a cycle that happens. Then it might be packaged as a mortgage-backed security and sold to an aggregator such as Fannie Mae or Freddie Mac. So all of that, there's fees that are associated with originating, closing, servicing, and packaging and selling those mortgage-backed securities, which might end up in your IRA or your retirement portfolios as something you're technically investing in the future. So for that, there's a delta of 1 to 1.5%. So whenever you see this, you're going to realize interest rates in general for a 30-year fix are about 1 to 1.5% higher than that, which does hold true today. It doesn't mean it can't be a little lower than 1. It just means that's a good average, or a good baseline is 1%. So when you scroll down here to see this chart, you're actually going to notice it looks like rates are going down if you just flow with the chart. And it's actually inverse. So as you see this going down, it actually means rates are going up. So right here you can see we had a recommended lock alert. And this was just the other day on March 26th. You can see on March 27th, it was ending up the day a little bit better that day. Okay, so this is where you see rates going down on the chart, but it actually means interest rates are going up. So it works the opposite way. Oftentimes, you're going to hear loan officers or mortgage banking professionals talk about the 10-year U.S. Treasury. And this works the same direction. And what I mean by this is, as you see this increasing right here, as it's going up, right? So as we are tracking this up, the 10-year is at 4.4. This doesn't mean interest rates, okay? This means that mortgage rates are trending higher. So if you look at this chart, clear back to December, the 10-year was somewhere in the 4.1, 4.6. We started cooking with fire back in February and March as the 10-year was dropping, right? We got clear down to like 4.05, 4.04, 4.03, 2, 1, dropped to about 3.99. It dropped, right? And then now you can see we're clear back up here to the 4.4. We're at the highest levels we've been this year. So what does this mean? You'll see these little lock buttons. So over the past 2 weeks, our advice to clients have been lock, 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 lock. Rates have just been trending up. So whether your loan officer is talking about the 10-year U.S. Treasury, or they're talking about the uniform mortgage-backed securities based on the 30-year, this one flows in the trend upwards. It's very easy to understand. This one for some consumers or real estate agents, you would say, but it's going down. That actually means rates are going up. So wanted to give you a little lesson there. Didn't want to keep it too high level, and I tried to keep this around 5 minutes. I'm hoping some of you watch this. It's a little longer than we like to go. But remember, on behalf of myself, Chris Carney, Alec Gagne, and our new partner Adam Oakes here at the Ross Group, we're always working together to serve you better. Have a great day, and I'm sure this was very enlightening for you. Take care.